Hey everybody, welcome to This Week in Housing with Jeff Skulnik. Today we're going to be going over forbearance and some other economic news, so check it out. The number of mortgages in active forbearance is at 2.33 million. Upon exiting from forbearance plan, 47.2% were paid in full, 36.6% worked out a repayment plan, and 16.2% were still in trouble. As of April 20th, there are now 160,000 high-risk forbearance exits who have left their plans and are not in loss mitigation and remain delinquent. That said, more than 100,000 of those borrowers were already delinquent heading into the pandemic, Black Knight had said. Economic news. Bill McBride, the day before, said some analysts think that this will be a very strong report with maybe 1.5 to 2.1 million jobs added. Wall Street Journal, the morning of, said U.S. non-farm payrolls are expected to increase by 1 million in April, and the unemployment rate is expected to fall to 5.8% from 6% a month earlier. The actual report, 266,000 jobs were added. Unemployment rate goes from 6% to 6.1%. As you can see here, the BLS unemployment rate as reported in April, 6.1%. CNBC said, one big reason for the acceleration was base effects. At this time a year ago, the economy was hit with the worst of the COVID pandemic and inflation was unusually low. Paul Krugman said, so the inflation report wasn't a nothing burger, but it was sort of a White Castle slider, not a very big deal. I beg to differ, I love White Castle. NAR's 2021 Q1 home price report. Lawrence Young said, the record high home prices are happening across nearly all markets, big and small, even in those metros that have long been considered off the radar in prior years for many home seekers. 99% of metro areas recorded year-over-year price increases, and 89% of metro areas had double-digit price gains. The top four financial institutions, JP Morgan, Merrill Lynch, Goldman Sachs, and Morgan Stanley. JP Morgan Insights report says home buyers' interest rates are still historically low, though they are inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are most likely to keep rising. If you are looking to purchase a new home, conditions now may be better than 12 months hence. Those who remember the housing bubble of 2006-2007 may be nervous watching U.S. housing prices soar now, but the previous bubble was fueled by speculative buying, which we do not think is the case today. Merrill Lynch Capital Market Outlook says, there are reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. Coronavirus-related preferences changes how also sharply boosted home buyers' demand. At the same time, supply is unusually tight, with available homes for sale at record low levels. Double-digit price gains are rationing the supply. Goldman Sachs research note on housing says, strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds and historically low mortgage rates had pushed demand to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. As a result, the model projects double-digit price gains both this year and next. Morgan Stanley Thoughts on the Market podcast said, unlike 15 years ago, the euphoria in today's home prices comes down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time sector is on sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. Lastly, Morgan Stanley strategist Vishwanath Tiruptur has said, we have strong conviction that we are not experiencing a bubble in the U.S. housing. We are not at all suggesting that home price appreciation will maintain its current torrid pace. Home prices will continue to rise, but more gradually. That's it for today's episode of This Week in Housing with Jeff Skulnik. Be sure to stay tuned and check out next week's episode. We'll be right back here Thursdays at 3 o'clock, and we'll see you then. Have a great day, everybody.